It's recently announced a $4 billion deal to sell its StubHub business, but is this going to be enough to turn around the fortunes of eBay? Hello, I'm David Jones. I've been a technical analyst in financial markets for the last 25 years, and this is our YouTube channel dedicated to looking at US stocks. I thought we'd take a look at eBay. It's been in the news over the last few days because it's announced the deal to sell its StubHub business to Viagogo. It's had a bit of a tough time, I think, over the last month since the earnings came out. So what we're going to do, we're going to take a quick look at what's happened since earnings. I'll come back, talk a bit more about the company, then we'll go back into the chart and look at things in a bit more detail, because I think there is a short-term trading opportunity in eBay, even though the longer-term view is maybe a bit more mixed. As usual, if you're watching this and you haven't subscribed, if you can subscribe, support the channel, and we'll continue to push out content like this. Let's catch up with what's happened with the eBay share price since its earnings in October. Let's take a quick look at eBay after their earnings. So the earnings came out, we can see here in October, the stock was trading around about $39, but they gapped lower, about 10% lower, slid as well into November. You know, they had been trading up at the highs for the year, up above, 40, 41 during the summer. And since then, they've been a little bit weak. They've tried to fill the gap. We're going to come back and have a look at this in a bit more detail. But let me talk a bit more about why the market was so disappointed by those earnings. Then we'll come back into this. So a bit more on that deal to sell StubHub before we jump back onto the chart. So it's selling StubHub to Viagogo for $4 billion. Back in 2007, it acquired StubHub for just over $300 million. So it's seen a pretty good return over the last 12 years, but it has been under pressure from activist investors from earlier in the year to look at really rationalizing its operations on fears of slowing growth. We had the latest earnings in the third week of October, and we saw that the price gapped lower, and it was more to do with its outlook, its forecast for the next quarter. Its forecast something like $2.8 billion in revenue. The market was expecting more like $2.85 billion. And there is just this concern, given the competition that eBay has from the likes of Facebook Marketplace these days, and other social media platforms. Are we past peak eBay? Is it no longer in the sort of growth stage that we've been used to over the years? And it has delivered great returns for investors over the last 10 years, but has been, somewhat flat over the last 12 months. So are the best days behind eBay? We're going to jump back onto the chart in a minute, but first of all, let's talk about the big levels to watch that I think are really important over the next few months. So in the summer, it traded as high as $42 a share. We've had that gap lower on the earnings, so I think the real immediate barrier comes in around about $36.65. I think that's one for short-term traders to watch. And again, if we can break through there, perhaps the stock can start to build some momentum again. On the downside is where it gets, I think, a bit more interesting. $34.50 a share. I think this is going to be a really pivotal level. And I think if it can hold above there, I think this is maybe the opportunity. However, on the flip side, because of course we need two approaches, if it starts to break lower, I think there's a real risk of a much deeper sell-off for eBay. So let's jump back onto the chart, see why these levels are important, and look at where the opportunity may be in the short to medium term. Let's just remind ourselves of the bigger picture for eBay. So going back to 2009, those lows around about $5 to where they're trading now, that's still an increase of sevenfold over the last 10 years or so. We've had this great trend that's been in place, hits all-time highs in February 2018, and since then it's just struggled. Let's just zoom in on this break of the trend line and really look at the last 12 months or so. So against a backdrop of strongly rising markets through much of this year, eBay has, I suppose, did follow the market higher into the summer, but has really struggled since then. And I think you could argue that 10-year trend is still going, even though we had the break through the trend line down here. The market has recovered, but it's perhaps just a little bit sideways at the moment. But I think there could still be opportunities. I think from a short to medium term trading point of view, there could still be opportunities. So let's just take a look at the last few months, what's been going on since those earnings. So at the moment, based on what's going on the chart, I don't think it's a buy and forget about it sort of a share. But let's look at what's happened. We had the move up to those highs at 42, and that was from a base set in March, April, May. and early June, around about, what, $35.50 a share. It did break below that support. We can see it here, breaking below in early November. And I suppose the aggressive trade to take here, if you think that eBay's, the pessimism by the market towards eBay is overdone, the aggressive trade is to assume we're going to claw our way back into the 40s. And I think that the place to have a stop loss would be below those most recent lows. And they're down at 34.50 from November. So with the price trading just below 36, in terms of risk reward, it might be quite an interesting one. Perhaps the more cautious would want to wait for signs of this gap here being filled. The high after earnings was in at 36.65, so perhaps we want to wait to see if that starts to get filled and eBay start continuing to fill the gap and pushing up to where it was before earnings. Looking at the RSI, we've got a 10-day RSI down here. Not surprised, really oversold on that sell-off, on that gap. Again, perhaps the cautious thing here, we've seen a bit of a blip higher the previous day at the time of recording based on that sale of StubHub to Viagogo. Let's see what happens if we trickle back to the low 35s. Do we see the buyers come back in? So for me, that's perhaps the opportunity at the moment. It's a shorter term opportunity, stops the other side of those November lows and looking for it to claw its way back up. That jump on the StubHub sale has put it above the 20-day moving average. But again, it's only 1 day. I would be a bit more cautious. Let's take a look now at the flip side to this. So what happens if we see eBay start to break below that November low? So I think for me, that would be a really bearish sign. We saw the market sell off heavily on its earnings. We could treat that as an overreaction, but if it's going to be an overreaction, we want to see that November low hold. If we start to break below there, it starts to open up levels from much earlier in the year. Initially targeting what, 32.30, the lows, this gap here from the 24th of January. And after that, I think the risk is, we go back and have a look at the lows from late December, pretty much bang on $26 a share. So for now, I think the aggressive trade, be a buyer, but recognize how important that pivotal low so far could be after those earnings. But longer term, it just looks a little bit sideways and perhaps more of a trading stock rather than a trending, just sit on it and wait for it to go higher type of share. That's it for this update on eBay. We'll come back to it in a couple of months' time and see how things are progressing. So from me, David Jones, good luck with your investing.